Hi friends, welcome to A to Z Learning channel. RBI yesterday announced cap on the bank's CEO term. It was a big news. To some extent, it was anticipated. What people experienced in the case of Yes Bank and their founder CEO, who continued at the helm for such a long period and ended up misrepresenting the performance of the bank for such a long period. So RBI was in consultation with all the private banks for a while, where they were consulting and seeking their feedback, inputs on suggested guideline for the future. And now, this week, has announced all the new norms which cap the term for which a bank can have a founder CEO. So in this video, we will help you understand the full detail of this new norms issued by RBI so that you understand, first of all, what are the kind of new guidelines issued by or new norms issued by RBI, who could be impacted by this, which banks could be impacted, so that as a shareholder, as an investor in those banks, you are fully aware and informed about the future of those banks. And towards the end, we will also take stock in terms of if there are any other implication, any other norms announced by the RBI. So the title of our video, the main topic that we are going to be covering is that let's understand the detail of the norms, the cap that is issued by RBI on the bank CEO's tenure. So first of all, let's understand what is the cap. As I said, RBI announced it yesterday, and they announced the cap on a bank's founder CEO. So there's a difference. So the founder CEOs who tend to kind of stay in the CEO position for a very, very long period, their term will be capped going forward. Along with CEO, even whole-time directors, their tenure will also be subject to new norms where they will be capped, their term will be capped. So first of all, when we look at the bank's CEO, RBI is saying that the tenure is capped at 12 years. So you can have a bank CEO for a maximum period of 12 years, which can be further extended by 3 years, provided RBI agrees with that. So normal period that they are capping is 12 years, but they're giving a window of opportunity for additional 3 years subject to RBI's approval. So overall, the period for which a CEO, a founder CEO can be CEO is up to a maximum of 15 years going forward. There are a number of CEOs uh, who are already at the helm for more than 15 years or very close to 15 years. RBI has also clarified that the any of the current CEOs, if they are impacted by this cap of 15 years, then they will be allowed to complete their current term as approved by RBI. So if someone has done, say, 15 years already, but they already have approval for another 2 years or 1 year, then they'll be allowed to complete that term. So they will not, there's no hard kind of cut at 15-year point. Current approvals that are in place for the current CEOs, those will be honored and accepted. There is also a norm announced in terms of fixing the upper age limit for all directors. So 75 years will be the upper age limit for all directors, and directors can be on the board for a maximum of 2 consecutive terms of 4 years. So back to back, you can be appointed, you can be on the board as a director only twice, which means 2 period of 4 years each, so 8 years. But so and 75 years age and the 4 year term up to two is the new norm for the directors. But for CEO, the upper age limit of 70 years will continue. The current age limit for a bank CEO is 70 years, and RBI is saying that that will continue, that will not change. And all these caps that I've just talked you through will apply to all private banks. So state banks are not subject to these caps, but it will apply to all private banks, but it will also include small finance banks like Equitas Bank. So those sort of banks will also be covered subject to these cap guidelines. So I hope it makes sense. You have understood what is the cap. If you are liking the content of this video, please press the like button and share our video with your friends and family. Now the second question comes is that who is impacted? Which are the banks, who are the individual who could be impacted by this? We have done our research. We have found that there are basically three potential uh, individual who could be impacted. So first of all, Mr. Uday Kotak of Kotak Mahindra Bank. He has been a CEO of the bank from the date when Kotak Mahindra got banking license in 2003. So he's already been a CEO for almost 18 years. So he will be impacted. Second is Mr. Deepak Gupta, who's second in line at Kotak Bank after Uday Kotak, and he was kind of for a very long time was assumed to be taking over from Mr. Kotak whenever he decide to kind of retire or leave the CEO position. He cannot also be he will also be subject to this cap because he has been a whole-time director for more than 15 years. So even his kind of tenure will be subject to this cap. So Kotak Mahindra Bank will have two senior individuals who will be impacted by this. Is it a bad news for the bank? First of all, we must understand Mr. Uday Kotak was given a further extension only last year, which is scheduled to be complete or will be finishing only in 2024. So Kotak Mahindra Bank has got 3 more years to find the successor of Mr. Uday Kotak. As RBI has said that if current CEO has got already a term approved, they'll be allowed to complete their approved term. So in Mr. Uday Kotak's case, he has got 3 more years to stay at the CEO, and 3 years is a long enough period for him to find the successor. So I feel that it is a news, but to some extent it was not surprising news. Kotak knew all along that at some point in time this will happen, and still they have got 3 years to find successors. So I feel it's neither a good news nor a bad news for Kotak Mahindra Bank, in my view. The other bank and the individual who is potentially impacted by this is Mr. Chandrasekhar Ghosh, who's the CEO, MD, and CEO of Bandhan Bank. He could be impacted. He's slightly kind of complicated case. Bandhan Bank became or got their banking license only 5 years ago. So if you look at overall tenure of Chandrasekhar Ghosh at Bandhan Bank, it's more than 15 years, so he'll be subject to that. But after becoming bank, it's been only 5 years. So I think it is still subject to further checking to find out what sort of interpretation RBI will apply in the case of Mr. Chandrasekhar Ghosh. I'm hoping that they will apply this 12-year subject to becoming 15 years sort of cap from the date when the Bandhan Bank became a bank, which was only 5 years ago. So if that is the kind of outcome, that is the interpretation RBI applies, then there is no issue because uh, it gives Bandhan Bank more than enough time to find the successor to Mr. Ghosh. So I again feel that depending on what interpretation we get from RBI, it may be a non-issue for Bandhan Bank also. Now, in the final part, I wanted to kind of share with you, are there any other additional norms impacting banks issued by RBI? Unfortunately, the answer is yes, but there's nothing that I would say is surprising in these additional norms. Since 2008, after the banking crisis, the financial crisis, banks all around the world has been subject to these additional norms, and RBI is also catching up and making sure that banks, private banks here in India also follow some of those best practices. So what are these additional norms? Let's understand. First of all, they are saying that the audit committees of the board would have only non-executive directors going forward, of course excluding the chairperson. Chairperson can be an executive, but all other members will have to be non-executive directors, so that the independence to the management being held accountable for the strategy and the decision making by the audit committee. So that's again a change seen worldwide. Now it's going to be happening in India as well. They're also saying that there is a requirement for banks to have a risk management committee, which is going to kind of look at and take stock of all the risk that is inherent in the bank's processes, bank's product offering. They are also saying that they'll have to have a nomination committee. So bank and board will review the nomination for people who are given the roles at senior level at the company, and there is also requirement for remuneration committee. So risk management committee, nomination committee, and remuneration committee, this there is a requirement to have board level. These committees need to be at the board level, which is again the best practice seen in the financial sector, financial industry worldwide since financial crisis. And with these announcement in India, we will also start to look what other countries are already doing. So I hope this short video, which is not very short, but still kind of short enough to give you all the detail about what RBI has announced in terms of CEO's term, whole time directors term, and also in terms of audit committees and various other board committees norms associated with that. Hopefully this is helpful. If you, as I said earlier, if you like our video, then content of this video, then please press the like button and share with your friends and family. If you've not subscribed our channel A to Z Learning as yet, I would urge you to please uh, become part of our viewers family, subscribe our channel, and become part of our family, because our family make the suggestion in terms of the videos that we'll be making in the future. So by subscribing our channel, you will have the chance to input into the agenda, input into the topics for the future video. So thank you very much for watching our video.